watching BloombergQuint, and we are getting you regular updates on the mega merger between HDFC Bank and HDFC Limited. It got announced before markets opened this morning. Brief details coming through from the management conference call, which was just held with analysts. The headline, of course, is that there will be a two-part merger. First, subsidiaries of HDFC Limited will be merged into HDFC Limited, and then HDFC Limited will be merged into HDFC Bank. So the consolidated entity will be HDFC Bank. HDFC Limited, over a period of time, once the approvals, etc., are in place, will cease to exist. The swap ratio, as agreed upon, is that for every 25 shares of HDFC with face value of ₹2, investors get 42 shares of HDFC Bank with a face value of ₹1 each. The merger values HDFC Limited at about 6% above its Friday's closing price, is what the early view coming in from analysts is. Now, once the merger is done, remember that HDFC Limited, which currently owns HDFC Bank or 21% in HDFC Bank, will then get merged into the bank. The bank will continue to be run by CEO Shashidhar Jagdishan. Mr. K.K. Mistry, who is vice chairman, will probably handhold the transition, but the transition, which is expected to take anywhere from 14 months upwards, could see Mr. K.K. Mistry coming very close to retirement age before actually the merger gets concluded. In the analyst call, there was a question asked as to what will be the role of Mr. Deepak Parekh, and that answer was not clearly defined by either management. Let's leave that aside. Let's start talking about why the merger and some of the implications. Now, remember, this is a merger which has been discussed for years. For as long as some of us have been covering the banking sector, we have asked the question to the two managements as to when this big merger will happen, and we were all told when the timing is right. Well, the timing is right now. And I think, as Mr. K.K. Mistry explained it, one reason for that is that there has been a considerable amount of harmonization in the regulations for housing finance companies and banks. So remember, the regulation of HFCs went from the National Housing Bank to the RBI to a large extent, and after that, the RBI has been slowly harmonizing the regulations for HFCs, bringing them closer in line with banks. So that one big sort of regulatory arbitrage to do housing finance in a different entity and banking in a different entity had anyway gone away. And you know that pairs of HDFC Bank, like ICICI Bank, do everything in a single entity. So, the need for those two separate entities was slowly starting to come down. That was a core reason that the timing was just considered to be right for this particular merger. But I think the other big hindrance has always been as what will be the additional capital that will be required for a merged entity to meet the priority sector norms, the cash reserve ratio norms, and the statutory liquidity ratio norms. All of these are higher in the case of banks than they are in the case of NBFCs and HFCs. So that was one big hindrance. Now, we didn't get an exact number from the management as to how much money they would need to raise, but they were fairly confident that they will be able to raise the required resources over a period of time, when this merger will conclude, to meet those requirements. Although Mr. K.K. Mistry also said that they have requested the Reserve Bank of India for a phased implementation of those rules. We don't know whether the RBI will agree to that or not. But if they do not, then the managements were fairly comfortable that they have enough liquid assets on their balance sheets right now, plus they will be able to raise whatever is required to meet those norms. One implication of this will be that in the near term, you will see HDFC Bank, for instance, hold slightly higher liquid assets on its books, and that may impact returns for a slight period of time. But once this merger is concluded, I think both sides of the management, Mr. Shashidhar Jagdishan and Mr. K.K. Mistry, were very clear that it will help them do a full suite of products under one umbrella. So, you will see the HDFC customers come into the HDFC Bank fold, and those customers will then, be able to buy into potentially HDFC Bank's much wider product suite. So I think, that cross-sell story, they believe, is going to be well and alive. Just reading out some comments coming in, Deepak Parekh, in the statement that he put out, says that this is a merger of equals. Over the last few years, various regulations of banks and NBFCs have been harmonized, thereby enabling this potential merger. He goes on to say that the resulting larger balance sheet would allow underwriting of large ticket infrastructure loans accelerate the pace of credit growth in the economy, boost affordable housing, increase the quantum of credit to the priority sector, including credit to the agricultural sector. So he's, sort of making the point that larger entity here will definitely benefit the economy as well. It's early days, and analysts are probably still doing the math. But I'm going to read out a couple of the reactions that have come in from analysts as well. From JM Financial, they said that the merger will entail the issuance of 1,877 million shares by HDFC Bank and the cancellation of limited shares in the bank and a dilution of 25% for the bank on a post-issuance basis. The combined loan book, they say, would be about 18 lakh crore, with 27% of that coming from mortgages. Compliance with priority sector loans, cash reserve ratio, statutory liquidity ratio will be a drag on the balance sheet of the bank in the near term. MK Global also taking a similar stance, saying that, look, this is going to be positive in the long run for sure, and the bank will benefit in terms of balance sheet size, market share, but it will be margin dilutive given that the higher share of mortgage business will bring down the margins. Risk-adjusted margins, though, will still be positive. There is one ambiguity on what happens to HDB Financial. Remember that HDFC Bank has a fairly large NBFC under it, which is HDB Financial. But Shashidhar Jagdishan said that we need clarity from the regulator on that, as to whether that would need to be folded in as well, or whether that can stay separate. And on that note, some clarity would also be needed on the insurance business. In the past, the regulator has frowned upon a bank holding too large a stake in the insurance business. So the transfer of that is something that will require some clarity as well as to whether they would need to create a holding company structure. The management said that if that is required, they will do it. If not, if the bank is allowed to hold the insurance company, it will do so. Big announcement for the banking sector, one that has been speculated for long, as I said, finally coming through. A press conference will follow at about 11:15, and you can watch that live on BloombergQuint. You should also go to the BloombergQuint site to read the story and the reactions as they come in. Thanks for watching.